All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And the first thing that I want to talk about is that the police in India arrest suspects in an alleged $14 million cryptocurrency scam. And another thing before we get into this article, I've been busy for the past couple of days, so I haven't been producing too much content. And today was one of those days, what do you call it? Oh, yeah, that's right, yard work day. So I've been doing that. Fortunately, my neighbor was actually helping me out. I guess he had nothing better to do, and he decided, hey, why don't I come and help you out? And you know what he did too? Gave me a margarita, of all things. Weird. So some tequila and margarita mix with salt around the edge too. How glorious. And let me just tell you, it's quite powerful. You feel it after just a few sips. So let's get right into it. Law enforcement in Mumbai, India have exposed a group allegedly involved in a cryptocurrency scam that amassed an estimated 1 billion rupees. No, not the Zelda rupees, the Indian rupees, nearly $17 million of them. The case reportedly led to the freezing of several accounts in the country and to the arrest of 4 individuals. According to the Times of India, the police are also looking for a 5th suspect, Ashok Goyal, who reportedly played a role in the alleged scam. The complaint alleged that 4 arrests were filed by a resident in the Indian city of Surat, who alleged that suspects defrauded him of 10.2 million rupees, about $145,000, so small potatoes compared to the entirety of the scam. So the accused meetings in Mumbai, Surat, the other parts of Gujarat, and lured people into investing their hard-earned money by promising double in 2 months. Oh, that double in 2 months return. Initially, the gang repaid a few investors to lure more people in and then defaulted. Their intention was to cheat. That is the classic Ponzi scheme. You just get a bunch of investors and then you pay a few of them out and then they go, hey, look, no, I got paid out. So everybody else is like, wow, this must be real. According to the report, the group launched a cryptocurrency dubbed CashCoin a year ago, which they sold to investors, promising them double returns. So sorry for all you CashCoin holders, it was a Ponzi scheme. The offenses registered by the city crime branch of the law enforcement forces, whatever, are reportedly cheating. Branch of trust and criminal conspiracy. Uh-oh. So, yeah, $17 million by just creating CashCoin, getting all them investors. That saucy Ponzi scheme. Moving on to Spain Central Bank says Bitcoin's inefficient as a large-scale payment system. Oh, Spain. The author of the report, Deputy General Director of Financial Innovation and Market Infrastructures, God, I love those long names. Carlos Cornesa started well. He clearly deliberated for some time over the title, finally settling on Bitcoin, a solution for payment systems or a solution in search of a problem. Ooh, very existential of you. Then follows the obligatory 10 pages explaining what Bitcoin is and how it works. The second part of the report looks at whether Bitcoin makes a good payment system. Spoiler alert, it doesn't. Unfortunately, Canesa's title rather sets the agenda for the whole report. So Spain, not looking too good on Bitcoin at the moment. The report takes the following form and analyze an essential attribute of Bitcoin, explain why this makes for an overcomplicated payment system, even though it's not. For example, attributes such as decentralization and lack of intermediaries. So decentralization suggests the report requires a process of intensive validation and the consumption of resources, which reduces system inefficiency or efficiency. In contrast, centralized systems with an intermediary trusted by the parties allow the design of much simpler and cheaper systems. Well, I'm going to give them that, but that's, again, a trusted system that you have to go through. So one of the main arguments Canessa makes against Bitcoin as a payment system is the ability to process transactions. He states that Bitcoin's potential 600,000 daily transactions are insignificant compared to global retail payment systems. True, but the development of Lightning Network, this statistic becomes insignificant. Which Lightning Network does come with its own problems, and one of the problems that has come up recently is that, well, if everything is on this off-chain transaction, Lightning Network, this third tier kind of system, this second layer system, if you will, then miners aren't being paid for those Lightning Network transactions. And so that's going to create some kind of weird system in the future that we might have to deal with. We might have to essentially put payment systems into Lightning Network like that, because if the fees are so light, then the miners really aren't getting the fees from that. And you'll have to rely on just mining Bitcoin alone, as currently miners rely on mining Bitcoin and the fees that they get from processing the transactions. It feels very much like BDE had to file a report criticizing Bitcoin and bigging up the status quo. In order to do so, it had to willfully ignore the actual state of Bitcoin today, and hope nobody realized, disingenuous to say the least. So that's not going to help Spain very much. So that's why I talked about this article. Now, this article is a little confusing because it's just one man's opinions, but it is from Spain's central bank. And if the central bank, of course, is hating on Bitcoin, it's not going to do well for Spanish Bitcoin in general. Because some countries are starting to realize, some banks are starting to realize, but overall, the volume of total transactions of Bitcoin is starting to really increase, and we're actually about 1.3 megabyte blocks on average, which goes to show that fees are incredibly low still, yet we have these large blocks and we have these transactions at the rate of basically January 2018 transaction levels, which were the highest of all time, and we're getting close to that, yet with fees of levels of 2014 fees. So Bitcoin is actually doing really well, and it's starting to morph into and evolve into a much better currency than it was. So we have a long way to go, but it is moving along. So this Chinese crypto mining guru predicts the Bitcoin price will surge 20,000%. So this is all for you guys who just need to hear something good, even though who knows if it's actually going to go 20,000%. But you guys want to hear something good, so of course you do. So Zhu, co-founder of crypto mining pool Poolin, recently made a bullish statement on Bitcoin's price, predicting that Bitcoin would surge to the new highs at 5 million Chinese yuan, roughly $740,000 per Bitcoin, from record high of above 17,000 to lows near 3,000. I don't know why they said above 17,000, because it was above 19,000, but okay. Bitcoin's year-long turbulence has not discouraged crypto bulls. The operator of the world's fourth largest mining pool with over 11% of the global hash rate still goes hyperbolic on Bitcoin price forecasts despite the current sluggish climate. Bitcoin price will be in the range of 74,000 to 740,000. Wow, that's only an exponential difference there in the next round of bull run. Now, 74,000 is a bit more realistic. 740,000. That's really insane. I doubt that's going to be that high anytime soon, if ever. And I hate to be bearish on that, if you will, but we all thought that Bitcoin was going to be. There was experts, there was the CNBC guys that were like, oh, it's going to be 50,000, it's going to be 75,000. Everybody thought by the time 2019 rolled around that Bitcoin would be 50,000. Even my own predictions of $25,000 Bitcoin at the end of 2018 were, quite frankly, wrong. Like everybody's Bitcoin predictions until the end of 2018, when everyone was like, "No, like my prediction is 3,000. Oh, I changed it to 5,000." You know, then you were right, but only till you changed it when the market wasn't changing. So, if Bitcoin were to rise so dramatically as Zhu suggests, his prediction, its future market cap would be $12 trillion, which is not too insane, as the world market cap is way far further than that. But that also includes everything like property and derivatives and everything like that, including stock and whatnot, not just actual floating money around. So the timetable for his prediction, Zhu didn't give a time frame more specific than the next round of bull run in his recent comment, and aren't we all waiting for that as well? And Winklevoss twins predicted a 4 trillion in December. But I think these predictions are a little ridiculous because, I mean, you could predict 4 trillion, and if it comes, then you're like, hey, I was right, but it came 10 years after that, and that kind of prediction is pretty easy to do, just like saying Apple stock could be this high after eventually in 5-10 years it could be. So it's just not much of a prediction, but I know you guys just needed that. You needed it so much with this bear run. But again, I don't see anything on the horizon for a bull run at the moment, except for maybe backed futures and these ETFs coming out, which people are pretty excited for. However, I'm not as excited as most people because I think the institutionalization of Bitcoin is completely against what Satoshi wanted, completely against the white paper of Bitcoin, completely against the idea of crypto itself, that it's for the people, for us, so that we can have transactions, so that we can get away from the banks. We don't need these institutions. We don't need Wall Street. And yet, everybody's excited. And the only reason people are excited about that is so that their crypto will go up in value. But just know that as soon as it goes up in value and you sell, you will not be able to buy back in once the institutions raise the price super high. And your US dollar will not buy, or your euro or whatever will not buy much Bitcoin anymore. And it will essentially be over for you if you don't continue hodling through that as well. And, you know, with the regulations that will come along with that, the institutionalization that will come along with that will not be a good thing for Bitcoin, and will essentially take Bitcoin away from the people and give it back to the institutions. It's just a terrible idea, and the only reason why people want it is so that their crypto will go up in value. But once you sell, again, it may be over for you if you start to sell. It's kind of like those crypto memes with Neo, and, you know, he's saying, you know, so one day you'll tell me that my Bitcoin will be worth millions, and then Morpheus is like, no, what I'm trying to tell you is that one day you won't have to sell it for millions. In the fact that one day your US dollar will be worth nothing, and the Bitcoin will be worth everything, and everybody will accept Bitcoin in the future for all the transactions and such, and that by selling it, you'll actually be getting rid of what is more valuable now than what was. So, very interesting. So Lightning Network capacity is up 38% since the Lightning Torch was created. So despite the year-long market, the bear market, combined with the recent market crash called the crypto winter, the Bitcoin Lightning Network has set a strong growth throughout 2018 and 2019. The Bitcoin Lightning Network, a second-layer payment protocol that operates on top of the Bitcoin blockchain, aims to solve the problems with scalability by using payment channels, a secure, fast way to carry out transactions between a number of users without recording them on blockchain until the moment the channel is closed. So the number of channels that are connecting nodes for the first time has also grown visibly in the last few months, totaling 27,000 unique channels. Currently, the Lightning Network sits at a capacity of 695 Bitcoin capacity, holding an equivalent US dollar value of 2.5 million, and the number of nodes on the network has increased by 18%. So there are 3,300 channels are active from the since of opening. This comes at 50%, but the capacity of Bitcoin Lightning Network consistently increasing. And in last 24 hours, 666 new channels have been opened, and medium node capacity is about $70. All the statistics have been taken from 1mil.com website, whatever that is. So there's this Lightning Network torch going around on Twitter, and everybody's supposed to put one Satoshi on it and then move that to another person. And everybody's been asking Elon Musk to pass the torch, and I don't think he has just yet. And that's been creating a lot of good publicity for Lightning Network overall. Lightning Network is very confusing to set up. It's very difficult for people to set it up. But the more people that set up a Lightning Network node, the bigger that capacity of Lightning Network gets. And eventually it will be so large that, again, we'll be using Lightning Network most exclusively or predominantly, as in SegWit has been predominantly among the network now. And it just took a little while. So Lightning Network is just going to take a little longer, and will help with those transactions, and one day make Bitcoin really a worldwide transaction. Because right now it's just it is just insufficient. It's objectively, statistically insufficient for worldwide transactions, but just fine for me and you, for just the people. But again, the more and more institutions, the more and more countries, the more and more people get involved in Bitcoin, the more it starts to slow down. You can start to see that with the 1.3 megabyte blocks on average currently going on now. So, crypto startups are targeting institutional investors, but when will they finally arrive? Like Game of Thrones, one such startup is Tagami, a new Jersey City-based company of under 20 people that offers a trading platform for institutional investors looking to throw around big bucks. As noted by Forbes, the company boasts an ex-global head of electronic trading at Goldman Sachs and a Harvard grad with experience at Union Square Ventures as founders, alongside a consulting private equity venture capitalism expert. Wow, that's quite the expert. Tagomi apparently works by providing institutional clients with easier onboarding into the world of cryptocurrency by pooling liquidity from approximately 10 exchanges and finding the lowest prices via algorithms, or essentially arbitrage trading, for a commission of 0.10% to upwards of 0.25% per trade. Of course, the current exchange model requires you to pre-fund your trade when you want to buy 1 million of Bitcoin. You need to have that thought through when you're likely to want to buy. Tagomi aims to make life easier for institutional investors by storing hefty funds on Coinbase Pro, Gemini, Kraken, Bitstamp, and others. Of course, institutional investors have been a buzzword for at least a solid year now. Now, I can't really I can't really appreciate that because they have they're storing hefty funds on Coinbase Pro, Gemini, Kraken, Bitstamp, and others, which are fairly safe exchanges for the most part, until they're not. And then they're going to lose a lot of funds, these hefty funds, when they get hacked, if they ever do. So I appreciate backed futures a little bit more because they're hiding them in cold storage until they move. So everything just sort of gets transferred to cold storage immediately, and then they settle in that Bitcoin, so they don't really need the exchange to do it. So that's probably not a good idea. Somebody should probably tell them that's not a good idea. Of course, institutional investors have been a buzzword for at least a solid year now. Many people speculate that smart money is still on the sidelines, but others insist that this belief is misguided. The world's most successful traders and investors buy the bottom and sell the top. To think the institutional investors are not currently playing the game might be foolish. If they are almost certainly on the short side until a true bottom for Bitcoin hits. So when are they going to come? I don't know. Backed futures and ETFs are on the way, just like the dragons are on the way eventually. Who knows? But the difference between some of these investors are that a lot of them trade paper. Like these futures are just traded via paper. You just give them money, you make a bet, essentially, you get money back, or you don't get money back. It's just paper trading. Whereas back futures, they actually have to buy it. You have to buy it from them with Bitcoin. You give them money, they have to buy the Bitcoin. They have to settle in Bitcoin. So they actually have to create demand with Bitcoin while they do it. So there's a big difference there. $121 billion market cap today. Ethereum pumping pretty good at 4.26%, which is one of the only real good pumps going on at the moment. Dogecoin way up at 2.59%. The biggest pump, ARK, wow, 45%. That's definitely organic. But Ethereum, in terms of the top 10 coins, is doing the best so far, whereas the other coins are down by just a little bit. But still, again, trading sideways. As you can see, we're going down slightly, though, from that pump 7 or 8 days ago. But for the most part, the market is actually up a little bit, still just trading sideways at 121 billion market cap. Nothing too crazy to report just today. But I hope you guys enjoyed this. That's all I got for you. Make sure you subscribe to the channel. Like the video. That helps me out a lot. My social media is in the description below. My Twitch, my Twitter, my Steam. Follow me on those if you get the opportunity. And I'd like to thank Josh Bryant for his $1 Patreon donation. Very generous of you. I appreciate you. You are now in the description below in the donators list. I appreciate that. But that's all I have for you guys. I hope you enjoyed it. And as usual, I will see you guys next time.